time, please.
Hi everyone, it's Emelia from SGX.
Thank you.
Welcome to another Playing with Fire show. We're here live from our Moomoo Singapore office. I'm Olivia Higgins, your host for today. Now, what is today's topic all about for Playing with Fire? You'll have to find out. Welcome back, everyone. Today, Playing with Fire, financial independence, retire early. Today's all about learning together and networking within the chat box. Now, this is the last episode for 2023, everyone. And so we've got a special guest for us today. But really, the topic of today, do Singaporeans really know their finances? I don't know. We're going to have to find out. And if you have some thoughts about that, type in the chat box right now your thoughts on whether they really know their finances, whether you know what you're talking about, and also your investment journeys. Okay, so share with us your thoughts, and also remember to like and subscribe if you want to really get to know more topics like today. Okay, so with that, do Singaporeans really know their finances? Let's welcome to the show from SGX Group, Director of Research and FinLit, Emelia Tan, everyone. Welcome, Emelia.
Hi everyone, hi Olivia. I'm Emelia, Research Director at the SGX Group, part of the Research and FinLit team. So you might hear from us regularly because we're the team that pushes out a lot of content on the Singapore market. And also we're the team that looks after the SGX Academy, which we run a lot of training courses for local investors, online and on physical sessions. And thank you for having me here today.
I know, she's here in the studio, everyone, in Moomoo, Singapore. So I think it's really great to have you here for the final show of the year, and also a really important topic, right? Because we're dealing with the Singapore market on your end, but we're also dealing with a lot of investors from Singapore. So Emelia, in recent news, right, Singapore was named the most expensive city again for the 9th time. So I think there is a lot of buzz on this topic, but seriously, is Singapore really the most expensive place to live? What do you think?
What do you think?
I think it really has a mixed approach. It depends on your spending habits and also your lifestyle. That's a lot of times in Singapore, I mean, for me, I like to have balance, of course, but I put my health first. Sometimes, it can get really expensive, but I think overall, if you have good planning and good investments in place, then it's actually all right.
It's true. So maybe we'll just talk a little bit about the news that you've mentioned. I think I saw that in the news a couple of days ago. That was by the EIU, which is the Economist Intelligence Unit. It's a report that they typically take a look at on an annual basis, right, for countries, in terms of like a few things. I think they look at things like groceries, alcohol, that's interesting, clothing, also interesting, and also definitely owning a private vehicle. And I think because of some of those considerations, Singapore comes out at the top, I think, ranking alongside cities like Zurich and all that. And New York also. And no surprises, because if you look at, inflation across globally, inflation has been very sticky, and that has been a big topic for this year. Right, and for Singapore, when you look at inflation numbers, you're always looking at two main things: housing, and then you're also always looking at vehicles, right? With COE at close to 100, if not more than $100,000. Naturally, that would be sort of topic that people always talk about, like Singapore is such an expensive place to live in and all that. But then again, if we break down the survey, and perhaps the survey may be looking at it from an expat standpoint, right? So if you're an expat standpoint, yes, perhaps there's certain expenses that are a little bit higher. But if you look at it from a local lens, from our perspective, right, taking into account some of the rebates, the government subsidies that are introduced and also brought in to help us cope, I think it's still fairly sort of, I'd like to see Singapore as a balanced place to live in. I mean, given that I can still go to a hawker centre, eat my favourite char kway teow, chicken rice. Yes, I acknowledge that now it's going to be very difficult to find $2 chicken rice,
I mean, it's
unlike last time.
Right? It's impossible, Emelia.
Exactly. And just the other day, we're just eating at McDonald's and then we're just deciding what to eat. And usually I just have my single cheeseburger, or my husband will have his double cheeseburger. And then we're like looking at, okay, what to order? And it's like, a double cheeseburger now costs $5.25, right? And it probably wasn't this price
Not at all.
a while
Not
ago.
even a few years ago, right?
Exactly. McDonald's used to be something that is what people would consider as affordable fast food in a way. Now, one meal with your drink and all that, if it's a limited edition burger, it could go up to close to $10.
Yeah.
So inflation is really, really very real, right?
And day to day.
Exactly,
right?
exactly.
You feel it.
Yeah, so I mean, from a personal standpoint, that really goes to show as in how inflation is quite real for us. And if we just if we don't do anything in that standpoint, our dollar value, our money, could potentially erode over time. And which is why investing is very important, because through investing, right, we can keep our money sort of up to date in a way that it's helping us to sort of stay abreast or keep ahead of inflation. Yeah, and maybe if we talk about indices, because since we're looking at the Economic Intelligence Unit, typically all these surveys, they do it at an index level, right? Same for your price index and all that. They look at it on an index level. So it's also, we should also acknowledge that it could be difficult to make certain calls based on data aggregates. And for example, right, not everything would be on a like-for-like basis. Car registration, all that, yes, very clear-cut. But things like, where's your top char kway teow, where's the best chicken rice, very subjective in nature. And that's the same problem that we also see with our local stock market, right? The STI can move up 0.5%, down 0.5%, but it doesn't mean that the whole market performs accordingly. Right, just if you look at November alone, in the month of November, STI actually generated 0.7% total returns. That's for the index. But within the index alone, what we looked at it, 30 constituents of the STI, close to, in fact, 2/3 of our companies actually were gainers, 1/3 were decliners. And we look at all the gainers for the month of November, all of them actually outperformed the index. And some of the sectors that outperformed were actually utilities, REITs, and also technology, averaging at about 9% gains. Right? And if you look at within the index alone, some of the top 3 companies, right, like Sembcorp Industries, Frasers Logistics and Commercial Trust, and also Mapletree Logistics Trust, they've averaged about, say, quite significant, almost close to double-digit kind of returns. Yeah, so I mean, within an index, and within an index alone, sort of what I'm trying to say is that while indices may indicate some form of a pattern, but it doesn't represent what the overall stock market actually shows. Same thing for these kind of surveys that show whether or not Singapore is an expensive country to live in and all that.
I know. I mean, being the director of research, I think it's also important to really break down that the data that we see, right? Because at the end of the day, we're also looking at buzzwords, titles that make things really attractive to read. But you mentioned the Singapore market and also the stock market. If you missed out our previous SGX Group webinar with Jeff Howie, the market strategist, you can definitely check it out at right now or on our YouTube channel. But if you have any questions for Emelia as well, we're going to take some questions towards the end of this interview, so drop those questions down because I'm actually tracking it right now. Okay, so the next question then, Emelia, from your experience with financial literacy with SGX Group, do Singaporeans know their finances or not?
I would say yes, definitely. Singaporeans are definitely a savvy bunch of folks, and they do know their finances. But having looked at some of the statistics also, for example, OCBC, they actually do an annual survey, right, in terms of, they call it the OCBC Financial Wellness Index. They started this in 2019, and they've actually published some of the 2023 figures quite recently. And in fact, this year alone, it shows that, I think, based on the study, their index score this year is at 60 points, which is the lowest since inception. And it does show certain things, right? Within the survey, I took a look at it. It shows that Singaporeans, for one, they are starting their retirement planning a little bit later. Some of them, for example, they break down into certain age groups, in the 20s, 30s, 40s, 50s, and they have actually surveyed them to say, like, when do you think of retirement planning? When have you started? And all that. And I think within each of the age groups, the ages that they plan to start planning for that has also shifted. So people are pushing back retirement planning, and fewer of those with plans for retirement planning are actually on track. But it does show, of course, that Singaporeans are prioritizing some of their debt payments, like home mortgages, loans, perhaps also because interest rates are so high.
Yes. So I think that's interesting because now we're talking about a show like this, Playing with Fire, right? We're talking about financial independence, retire early. That was actually a movement within, the Gen Z groups, or even just, on social media. Everyone's going for that freedom element. Yeah. But do we have what it takes to get there? What is some of the research that has come out from your own studies with SGX Group on not just Singaporeans, but maybe the residents in Singapore? We can compare the age groups or genders.
Of course. I think if you take a look at some of the stats that we have seen so far, Singaporeans love to save. They save quite a fair bit. But what's also interesting in one of the recent articles that I saw is that Singaporeans save a lot, but a lot of the time they rely on banks and also cash when it comes to saving. But that's one thing that sort of...
culture, isn't it?
It is in the culture, and not saying that is not good, right? In fact, I think close to 70% are concerned about inflation impacting their savings. So it's interesting to say that, to look at how Singaporeans love to save, but they're leaving money in the bank, and then they're concerned about inflation. So naturally, sort of one thing I would like to sort of chime in is that saving is important, and I hope investors, sort of Singaporean investors over time, sort of look at investing as part of the invest saver, set these kind of goals. Because if you park $100 away every month and you leave that in a bank, what does that get you at the end of X number of years? The interest rate multiplied by X number of years, the money has been in that bank so far, right? But for example, if you put it into, say, a regular share savings plan, and every $100 you put in every month, that goes into dollar cost averaging, buying an index, for example. Over time, the index also pays dividends. You get to collect sort of these total returns on an annual basis, and that helps your money sort of stay ahead with inflation, right? And that gives you a start towards investing. And it's not too difficult, because if you look at some of these regular share savings plans, it starts as simple as just $100 every month. It starts small, right? Because when we talk about investing, and for beginners who are just starting out, what I would recommend would be to start with a market that you're familiar with, home ground perhaps, because number one, currency. If I'm based in Singapore, my bank account is in Singapore, my salary is in Singapore, my expenses are in Sing dollars terms. Naturally, I would want to also put some, invest in a home market, right? So I don't have to worry about the currency risk over there. Number two, for the home market, whilst investors that invest globally may say Singapore market's very boring, there's not much volatility, there's not much interest, but hey, for beginner investors, if you want to start off with a market that is so volatile, it could be scary, right? Because if you're not ready for that kind of ups and downs, why not start off with a market that is a little bit more stable? And the third thing would be, if you start off with the Singapore market, at least some of the names, the day-to-day kind of household names, you're familiar with that, so to speak. Yeah, so that is what I would recommend in a way to get started out with.
I think those are really good points, because we were also talking about, how, there's so many types of investors that come on here. I mean, we have so many types of questions, but I think a lot of them are also so interested in the outside of Singapore market, right? They're always talking about the US market, the excitement of that, the volatility. But at the same time, coming back to home ground, to Singapore, where it's a bit more, let's say, stable, less exciting, but at the same time, a really good ground for that sort of long-term investments. So what are some of the trends right now within your investors? Like, how are they learning to invest within the Singapore market, talking about uncertainty at the moment?
Correct. Actually, on that point, it's very interesting to see over the last sort of 12 months or this year alone so far, we've seen a lot of investors coming to the Singapore market to open CDP share accounts, right? And when we had a look at some of the data just to get a sense on what kind of investors or what kind of individuals these are that's opening new CDP accounts, we find that majority of them are actually getting younger. Right, within the sort of 26 to 35 kind of age group. And interesting to see that, traditionally, people always say like, okay, when it comes to investing, it's always a men's world out there because the men do better in investing, good at numbers and all that. But we're starting to see actually majority, I think close to about 55-60% of those individuals that open accounts over the last year are actually females. So it's very heartening from that standpoint to see that, younger investors are coming into the market and they're having a bit of a more balanced mix, so to speak. But of course, with the interest rates being so high, a lot of, if you talk to some of the university kids or kids that are coming out from school, entering the workforce and all that, they're even starting to talk about things like T-bills, SSBs. Natural, no doubt. I mean, I'm sure all of us would have subscribed at some point given the interest rates that these T-bills are paying out, right? That's a good starting ground also. At least you get to dabble in with some of these financial instruments as a start, right? Then as you transition, as your T-bill matures for 6 months and then you get your money back and you're like wondering, okay, where do I put my money next? Perhaps you can also then start to look at some of the related kind of equities. For example, the dividend paying type equities that are also yielding that kind of 4 to 5% on a consistent basis. Of course, consistency is key over here because we're not recommending for investors to just, look at a stock screener, screen for stocks that are have the highest dividends, right? Because it's important that we do our own due diligence, do our own research, right? Look at some of the health of these stocks before we actually invest in.
Absolutely. Due diligence and also doing your homework based on solid research and the fundamentals before jumping in. Now, I know I have some questions coming in as well. So if you like this topic so far, send us a heart and a like in the chat box right now. I want to see all those hearts and likes and also the comments from you guys on whether or not you think Singaporeans know their finances. Because Emelia, I think, I grew up in Singapore, so I'm Singaporean, but it's just that my dad's Australian, and so I've got a really mixed upbringing. We've got such a solid ground of values with how we spend our money and how how much liberty we can have with that, right? So I think growing up it was really like both a mix of conservative and also a bit of like Western values. So I think like for my generation as well, like growing up, we don't really remember having so many financial literacy courses. Like it's not something that is being taught as much in our schools, right? Like, would you agree with that?
I would agree. Growing up, if not for my parents having sort of instilled that kind of importance of money. Money doesn't grow on trees.
The classic phrase.
Money don't fall from the sky. You have to work and you have to save hard. Yes, I totally agree with you. But also interesting to see that some of the schools today are actually incorporating these courses.
So they've started already, right?
They have actually started.
Would you say primary school or kindergarten?
I would say in university, definitely we have those, right? But hoping to see some of these courses getting introduced into the younger segment because it's always good to start early on. For Singaporeans, those that grew up over here, and Olivia, I don't know about yourself, but if you recall sort of last time, there was always the OCBC squirrel, that always talks about savings, right?
Yes, actually, I know the squirrel.
Yeah, so probably at some juncture, the government did cultivate that,
Yes.
and it's definitely important. And actually, you mentioned a little bit about financial freedom much earlier on. I didn't get to touch on that topic. As you start planning for your retirement, or you start planning for your own finances and all that, I think there are a few sort of key points that perhaps we can all sort of take note for our own self. One would be what it means for you in terms of, for example, retirement planning, right? What does that mean? Or maybe, Olivia, if you could just talk a little bit about what financial retirement planning means to you. Then I can sort of just come in to share what it means to me also.
Well, I think that planning process, or especially for retirement, for me, it's always been tied to freedom.
Yes.
Yeah.
Same
to free
thing.
up that time
Same
for
thing.
things that I love. And at the core of that has always been my health as the ultimate wealth. So I think the investments that I do, it's always just to free up my time
Yep.
and space within my mind, my
Yep.
mental health, so that at least I know I have that ground for myself to keep going with what I want to do.
Totally
And
agree.
have that safety net.
Totally agree.
But I also find it fun and exciting in some ways, right? So even in the Singapore market, I always just find industries or companies that are aligned with my values, and make sure that I think ahead, like for the long term. But that's my personal take on it. What about yourself?
That's good to hear. I think if you were to ask me, right, financial freedom would be one thing that I would hope to achieve eventually. And sort of what that means would be, ideally, I would hope to or strive to sort of live off interest in terms of my investable assets. That also means I have to do work myself.
Yes.
I also have to build up a potentially dividend portfolio so that I can eventually down the road, when I'm sort of retired, not working, I can live off that portfolio over there. But of course, it's important for us to take note of a few things. Number one would be setting these goals for us, what it means for you, in a way, to know what you need when you're retired, to know what you need in terms of how much to live in a way,
What's your lifestyle,
exactly what's your
right?
lifestyle,
What's your appetite?
and what's your goals,
Yeah.
and be realistic, right? If I can't expect to sort of travel first class, every month, every year. But if I can do a short trip to, say, Bangkok, Penang, every
Bali.
year, Bali, a short trip over there, so that still makes sense. And then I can build in this to say, okay, if every year I need to do a short trip, this is how much I need to start planning, how much I need to actually save up. Studies have also shown, right, in Singapore, if you are at a certain age, and if you're single, perhaps you need up to about 1,400 to sustain your lifestyle. If you're a couple in your 60s, 70s, perhaps you need about 2004. So it's important for us to know how much it takes for us to spend on a monthly or a yearly basis, so that we know how much to apportion aside. So that goes to say that every month, in terms of our expenses, it's good for us to know how much we actually spend, and just to get a sense of things. Be realistic. Set goals. Everybody may have different views, and that is totally fine. And one more thing would be to start. And it's never too late to start. Start early, yes, that's always important, but never ever too late to start. But do start somewhere. And eventually, savings alone, given that you guys were talking about, we were all talking about how it's so expensive in Singapore these days, right? Savings alone, I don't know whether that's going to be enough, but that's where investing is important, because inflation doesn't corrode away the money that we save in the bank. And of course, set certain objectives, and start small. And of course, through the investing journey, it's also important for us to not be emotional, and also be disciplined, meaning to say that we should be doing an annual sort of regular review of our portfolio, and if there's certain things that are not performing as well, we should also be disciplined in order to know when to cut loss.
Right. Yeah, because, money doesn't fall from the sky, right, Emelia?
Yes, it doesn't grow on trees either.
That's just something we hear growing up, especially in like the Asian households. Like
Yes.
my mom used to say that as well. But the thing is, Singapore. Okay, let's look at the characteristics of Singaporeans. You say, starting early, never too late to start. But we know the Kiasuism that exists within the Singapore community. You go to somewhere and you say there's an announcement for a new stall. There's a queue the next day, and they are willing to queue for hours. Don't you agree with me?
That is
so
true.
I think in terms of investing, don't you think that sort of cultural characteristic, I mean, for those people who don't know what Kiasuism means, maybe you could explain.
Afraid to lose.
Yeah, afraid
right?
to lose.
I think that's the easiest way to explain what being kiasu means.
So, with that, like, do you think that actually translates to the investor mindset, right? Like people because we do have that culture of saving, right? Which is a great thing. We always want to make sure that we have that safety net. But in terms of active investing, does that Singaporean value or characteristic come about?
I certainly hope it does, right? For example, if applying the kiasuness, which is, are you beating some of your peers? How are you comparing versus them? Hopefully that will sort of come true for the investment community. But that being said, with investing, it's a very personal thing, right? It doesn't, I don't feel the need to compete with my peer or my relatives to say, okay, this year I've beat the benchmark by how much, this year I've not beat the benchmark by how much.
I know some of you in the community are like that, okay?
And it's fine because for those that's in the community over here, everybody has different strategies, everybody has different sort of risk appetite and all that. So, everybody may do things differently and it's fair and it's right to have different views. But it doesn't matter, for example, if you're saying like, okay, I feel like I'm losing out because this quarter I didn't do as well as my peer, it doesn't matter. That's when the regular review and being disciplined comes in, and also not being too emotional about making losses or if someone does better in terms of their portfolio versus yours, because investing is really personal. It's what you feel, and these are different goals that you set for yourself, really.
So try to be disciplined, rational, and clear-minded, right, in your approach. So, great points right there. Now, we've got some questions from everyone, okay? We're just going to take the questions now for the second half of the interview before we wrap up. But the first question, I think this one is very relevant to our Singapore context. Now, you talk about the different encouragement schemes from, like, maybe the support from the government and all that in Singapore compared to, like, maybe the expatriates. So, what are your insights on, like, for example, the CPF to, sort of offer fund portfolios to encourage Singaporeans to learn investing? I think we're really just going to the learning of investing here for this point.
Even for CPF alone, I'm no CPF expert over here, and I'm still learning from even the community, right? Some of the KOLs out there, they talk a little bit about CPF hacks and all that. Even, myself, I've been learning from them.
I think it's a hashtag, right?
Yes.
Hashtag CPF hack.
Yeah, CPF hacks, something that we always talk about, especially towards the year-end season, right? People always talk about how, this SRS, which is the Supplementary Retirement Scheme. The number is, I think, close to about 15,000, where you can put into your CPF and then you get certain tax rebates from there. And what's interesting is that once you put money into CPF, SRS, you can actually invest, and you should invest. You know why? Because if you put money into SRS just like that, I think the interest is only 0.5%.
Yeah?
0.5 or 0.05. It's really sort of minimal in a way.
Right.
And you can actually use CPF funds to invest into the local stock market. And you can also use a portion of your ordinary account to do investments also. So for investors that are, putting money into their CPF, CPF is government's way of getting us to think about retirement early and also build up the kind of retirement fund.
This forced saving
system. Correct. And on CPF alone, we can do many things with it. We can use a portion of it for housing. We can also invest based on certain stocks that we have over there on the CPF IS list. So these are options for everyone to just take note of.
Yeah, I think, that is something you might want to consider as well. You can definitely check out more resources on that on the Moo community and also our Moo Learn if you want to know how you can also engage your own finances with this. Now, the next one is about schools and children, and I think someone here would like to know, what is SGX Group doing in terms of FinLit for this? So how can schools in Singapore do more to teach children, not university or secondary school students, but children about finances and management and investments? Like, do you have any initiatives with the SGX Group for this?
Under the SGX Group, we do have the SGX Cares, which is part of the charity arm of the SGX. So we do have a FinLit arm over there, a FinLit pillar that looks at financial literacy, and over there sort of we work with certain partners, beneficiaries,
I love that.
to just share a little bit more about financial planning, financial literacy. But I feel that probably, there's definitely a lot more that we can do as well. And hopefully we'll hope to work with some of the partners out there within the community. Moomoo is one of them, right? To reach out to some of the schools, to talk a little bit about money. And I think that is very important. You know why? Because if you look at the primary schools out there, they're definitely keeping up with the times, technology and all that. Some schools are giving students something like an Apple Watch, or is it the Apple Watch, or something similar to that, right? And the canteens are all digitized or digitalized in a way.
I didn't even know this.
You go there, you order your chicken rice, all you need to do is just scan your watch, and then
That's great.
You just pay
I
like
mean,
that.
during our times, we had to just like have the coins and also like the notes, right?
Yeah.
Like now I don't even think cash is being used.
But does that mean that our kids or students will know how to actually make use of money, right? If you're given a $5 note, do you know how much change you're gonna get if this thing
that's a
costs
good point,
$1.30? Yeah, so things like
good
that.
point.
I think it's still important for us to sort of instill that kind of monetary value when it comes to money for our kids these days. Because if not, over time, right? If they get certain toys very easily, or they get certain instant gratification, then will they actually know the value of money? And that would just be one of my worries, as the alpha generation grows up. Hopefully, they will be able to learn that over time. Maybe I'm just being kiasu over here. But I would sort of worry.
We all are. We all have a bit of kiasuism.
Exactly. I think if I have kids, I'll probably worry, and then just make sure that they get started young.
Yes. I mean, just growing up, you have that notion of the piggy bank.
Yes.
Putting physical money in there. That's something you can see, and you can see it accumulate, and you can feel it too, right? But if it's all digitized, like you said, it's hard to kind of gauge that visibility of the money. And I think as a young kid, because you're so visual, that could be a concern, but we don't know, right? We hope that more is being done within that space.
For parents who are in the Moomoo community, hopefully you guys are probably already doing this lah. Maybe there are certain things that we can also hear from you guys and learn perhaps from you guys on how you're bringing up your kids these days, because personally, I would also like to learn.
Yeah, me
right?
too. Leave a comment down below. How are you teaching your own kids on how they can learn more about financial literacy and also the value of money and investing? I think that's a really important point. But now that you brought up SGX Cares, at this juncture, I would like to announce that we have a special giveaway to our audience members tuning in right now. This is to reward you for being here with us. We're always rewarding you for being on the live shows with us. But with that, I know a lot of you missed out on this cap that we actually gave out for the SGX Cares Bull Charge 2023. So if you actually want to get one of these, what you have to do is very simple. You have to be based in Singapore, number one. And two, you have to subscribe, okay? Subscribe to our YouTube Singapore channel and take a screenshot and put it in the chat below in the Moomoo app. Yes? Do you want one of these? You have to, again, subscribe to our YouTube Singapore channel. Take a screenshot that you've subscribed and leave it down below in the comments. Take a screenshot right now and we'll reward some of our viewers with this, because I know a lot of them wanted to get this.
Can I get one too?
Yeah, you can, definitely. But again, I'll do another shout out after this. But thank you so far for your questions. Now, the next question is about, for the retail investors and the Singapore market. So someone here would like to know, if I'm in my 20s and 30s, right, and I don't really see my retirement age, and let's say I want to retire as soon as possible. What can I do within the SG market to sort of make it more exciting for myself, to help myself achieve these goals?
Perhaps what I would say would be, you're right, sort of good that you are starting to plan ahead, right? And perhaps for a start would be to set some goals, to know sort of what you want to get at, what kind of end goal you're trying to achieve, to know yourself also in terms of what's your risk appetite. Are you a conservative investor? Are you a moderate investor? Are you a very aggressive investor? And what sort of time horizon you're kind of looking at, just to get a sense and know yourself a little bit more before you decide on what and how to go about it. For example, there's literature out there to say model portfolios for a moderate risk profile, right? Goes about like 50 to 60% into fixed income, the remaining about 35 to 40% in equities, and a good 5 to 10% in cash. Then obviously, accordingly, the equities exposure and also the fixed income exposure will be tweaked accordingly if your risk appetite is not as high or a little bit more aggressive, right? So sort of know yourself and then start off over there. What I can say is that for investors that are just starting out, right, looking at the Singapore market, if you're not sure and not don't want to do stock picking at this point, exchange traded funds, ETFs, are a good start, right? Because what ETFs do is that it buys into a basket of stocks. For example, if you're looking at the STI benchmark and you want to get exposure into the Sing market, the STI ETF, we've got a few of them over here listed in the SGX, right? That could be a starting point. And ETFs, one thing I like about ETFs in terms of the benefit that it provides is the exposure into a basket of stocks, so that from a cost standpoint, I don't have to buy all 30 constituents. I just buy one ETF, and that gives me the kind of instant diversification into the market. And for our Singapore market, people know us for dividends, right? The average dividend of the STI is about 4 to 5%, and that is consistently one of the highest dividend yielding markets compared regionally and also globally, right? I think globally it's about maybe 2 or 3%, but we are consistently at around 4 to 5%. Couple of reasons why, right? Singapore market, a lot of the stocks, they do pay out quite a significant amount of their profits back into the shareholders in a way to reward them for staying invested into their companies. REITs, for example, is another one. We have about close to 40 REITs that are listed and traded on the SGX. The average dividend yield of our REIT sector is about 6 to 7% also. We do have ETFs that actually track some of these REIT indices. There are some that are on a pure play, sort of, if you're looking at just Singapore REITs, we have a Singapore REIT ETF. If you're looking at regional REITs or some of the thematic, like ESG, people talk about sustainability investing, green REITs, so on and so forth. There's also an ETF that actually tracks some of these also. And not just that, just plugging in a little bit more would be, actually with the whole ETF space, you don't just start off, you don't just have to invest in the Singapore market. Actually, there are some of these ETFs that we have over here that provide investors with exposure into the region and into the other markets also. So for investors that are just starting out, you could have a look at some of these, but of course, do understand the product that you're getting into. Of course, do your own due diligence before you invest into a company. What you want to do is that you're going to eventually be a shareholder of this company. So it's important that you know what are you buying into, right? How does this company, make money? How does the company run? What kind of business lines this company does? Is the company paying dividends, so on and so forth? It's important for you to know what you're getting into because eventually you'll be an owner of this company. So it's important that we all do our due diligence.
Absolutely. Due diligence and also the homework, okay, on your own, because at the end of the day, it's your own personal choice and you do want to align it with what you are looking for in the long term. Correct. Now, you mentioned sustainability and ESG. So we've got also, some questions here about, how Singapore, we talk about Singapore and we talk about most expensive city, but there's also another characteristic about Singapore, about the green plan that's upcoming, right?
2030.
Absolutely. There's the 2030 and then there's also that 2040 ultimate plan, right? But then we've got the electric vehicle space. We've got the incentives for road tax. We've got so much within our buildings and within the REIT space where it's all turning green. So what is that, I suppose, insights on the investors based on your research towards investing in these spaces? Like, what is it like? Are Singaporeans really in the know of all these trends that are existing? Do they want to be a part of this new world trend of everyone being on board with sustainability?
I would say a mix because you do have investors that are starting to look out in this space, right? They're starting to ask questions as to, okay, how's the company doing in terms of the environmental pillar? So
the sentiment is there.
The sentiment is there. Corporate governance. Every year there's always the GTI index, Governance and Transparency Index. Our SGX RegCo actually just did a survey also having a look at how our companies have been reporting. And, with how we've started with the whole mandatory climate reporting, companies are starting to get more mature in terms of the reporting process to disclose a little bit more. And that is important also because disclosures is one thing, right? And maybe investors will make use more of these data sets to do the analysis. But as with disclosures, I mean, as you hear companies talk a little bit more about what they're doing, it goes to show that the company is actually invested in really doing good for the world or for the economy or within this topic. So, which is why sort of when we talk to listed companies, we always say that it's important for you to engage with investors, and that's where we do, as part of the whole FinLit SGX Academy initiative, we do run a lot of these corporate webinars on a regular basis so that investors are able to hear from the corporates themselves in terms of their latest business updates, what are they doing in terms of the ESG space. But coming back into the investing with that kind of flavor, right? Yes, I think there's slowly, we're seeing sort of interest coming into that space. But of course, access is one, right? Meaning to say, how do investors get into that space? Again, we through some of these exchange traded funds, ETFs, we do have these sort of thematic flavors. Not just that, within our own stock market also on an individual level, right? For example, if you look at our market within the STI, some of the performing best performing stocks so far have been some of the utility sector. And I think the Moomoo community, probably you guys are more up to date with some of the numbers, right? We have companies that are transitioning themselves in this whole green energy space. Sembcorp Industries, one of them. Even Sembcorp Marine, their order book is also moving in that direction. Keppel Corp, these are some of the stocks that have, starting to pivot themselves towards renewable energy. Some of the order books are also within the whole clean energy space. And I think because of that also, that was what I wanted to just touch on a little bit on, which is Seatrium. The stock that joined the STI this year, that was after the merger together with Keppel Offshore and Marine. They've actually boosted their market value to over $7 billion today. And they are also on the green pivot, Seatrium, right?
That was this year, wasn't it?
That was correct. And they've got about 40% of their order book consisting of renewables and also greener solutions, right? So we're seeing a lot of these traditionally ink kind of potentially traditionally brown sectors also moving and pivoting themselves also. So it's very interesting how companies are moving in this direction, and they're also talking to investors about themselves in this space.
Wow, that's great. Thank you for sharing that research and also the stats related to the Singapore market. Now, I know someone asked about the outlook, right? So remember, we had our SGX Group live webinar with strategist Jeff Howie. So definitely check that out right here in the app, or go to our YouTube channel. It's right there, one of the latest live webinars to see our SG market wrap up and also outlook for 2024. It's all covered in detail in that live webinar. So everything that Emelia just touched on, we go in depth in that webinar. So definitely check it out because the replays are all there just for you. Okay, so once again, I'm gonna do the other shout out again with SGX Bull Charge 2023. I know a lot of you, this is so popular. I mean, I have one on my desk as well, but like everybody who wants this, you need to subscribe to our YouTube Singapore channel right now and screenshot it, okay? And you have to be based in Singapore to receive this, okay? So definitely do that and we'll pick the winners. So you have to do that and do it in the chat box right now. Send the screenshot and we'll also review it after the show ends. Now, Emelia, I've got the next question for you related to the efforts with the SGX Group. Like, what are we looking forward to next year from you guys in terms of finance literacy? And also, I think it's about working together in our partnership. I mean, you coming to our show today and having all these other shows with us, it's been such a great effort together. And we also did Invest Fair together on stage for the women's panel. So with these topics, what can we look forward to next year?
I think we'll look forward to a lot of exciting events and news. Probably, given that you've seen some of us at some of the events that we've run and we've been together with Olivia, we'll probably look forward to more of those. Because for our team, sort of objective would be we've got 4 research analysts within the team, and our role really is about pushing out content on the local market, because we always find that for investors to make the kind of decision to invest in a stock or in a product, information and research is very, very important. Absolutely. And that forms your basis of having to sort of make the kind of informed decision. And that's where we work with a lot with partners like Moomoo. You also catch the research team writing columns on some of the media channels, Business Times, going on radio and all that. So we will continue to do a lot more of these. And I think we will also, of course, hope to share a little bit more down the road some of these financial literate, FinLit initiatives with the Moomoo community. I don't know if we could potentially even see one where the Moomoo community could join us with some of these volunteering.
Yes, I would love that. I mean, we have these initiatives already in place, and we've already invited some of our special members from the community for interviews. So definitely stay tuned for that, because that's upcoming for the end of the year. But I think essentially, we're really, really excited for this partnership. And if you want to see a particular topic with Emelia or another member of the SGX group, type in the topic and maybe even the speaker in the comment section right now. What's the next topic that you would like to see for next year? I mean, we're definitely going to kick off January with the bang, so definitely type it in right now, okay? And on top with that topic, I think the application of what you just learned for today, you can definitely just, on the top of my mind here, you can go to your Moomoo app and you can click on the Markets tab. Click on the Markets tab and go to Singapore. Okay, so when you see SG right there, you can see all the available REITs, the IPOs, warrants, DLCs, ETFs, and you can also have the screener right here. You see, I've got it right here. I don't know if you can see it, but definitely check it out for yourselves, okay, for the Singapore market. Everything Emelia mentioned in terms of research and also insights from their own investors, it's all there, okay? So definitely check it out for yourselves, and we really look forward to that. Now, the final words for our investors going forward. I mean, it's been a wild year, hasn't it, Emelia?
It has been. It has been.
You said the Singapore market is also known for its resilience and its stability, right? So how can we make use of this strength within the Singapore market as an investor in Singapore that knows our finances to go forward stronger and smarter for next year?
I think it's really heartening to see the Moomoo community sort of looking at this and also asking this kind of questions. I think if I could sort of just reiterate the few points that I talked about earlier on, which is start early. It's never too late to start. Start small, step by step. We're all based in Singapore. Probably majority of us are Singaporeans also. Start with in a market that you're familiar with, right? Home ground. And just plugging a little bit, which is the STI ETF, right? I think since inception, that was about in 2002 up till now. The returns have actually been since inception up till now, up to I think July this year, right? The annual returns on that ETF, STI ETF alone, is about 6.4% on an annualized basis for every year. So for investors sort of that are looking to invest in the long term, and when we talk about investing, it's always on a long term journey, right? If it's short term, then that is probably more trading.
Absolutely.
Right? So if your investors are looking at the long term, we hope that the Sing market will, you find that it's relevant, and there's an opportunity for you to be able to start saving and growing your savings through that. Right? At the SGX Academy, we do run a lot of these training courses, webinars. We have speakers, we have trainers that talk a little bit about how to get started with investing. Right? We have the beginner kind, followed by intermediate, advanced level for different kind of investor levels. Many of these courses that we run are also for free. So do join us on some of these academy sessions. We will talk about basics of investing, how to get started, portfolio management, and of course for those that are just starting out, have a look at some of the regular share savings plans, because that will be as a part of your invest saver kind of journey. Every month you park a few $100s over there, since you're saving in the bank anyway. that will just naturally buy into some of these ETFs over time. And at the end of it, it's dividend reinvested and all that. At the end of it, you may realize that, I didn't realize that I've stashed away this amount, which will be a journey and a starting point for retirement planning. But most importantly would be not procrastinate. We're reaching the end of 2023, perhaps as part of setting 2024 goals. I hope everybody will maybe pick that up and maybe set some little goals step by step for 2024. And I hope to see you guys join us in some of our sessions down the road. The team is always here. Feel free to reach out to us through the Moomoo platform. I think we'll be happy to address some of these questions along the way, because really it's more of in our interest to get Singaporean investors started out on this whole FinLit journey. And of course, for research and content, do follow our SGX Invest Telegram channel for daily updates also.
Absolutely. And you can watch the replay of this whenever it's finished on our YouTube channel and also on our Moomoo app. And that was from SGX Group, everyone, Director of Research and FinLit, Emelia Tan, everyone. Thank you so much for coming onto our Playing with Fire show.
Thank you for having me, Olivia. And thank you for joining me, everybody.
Yes, if you want to see her again, definitely type in yes. I'm sure they would, because you really shared a lot of important advice for the investors out there, and also unpacking the notion of whether Singaporeans really know their finances. So really, really great to cover the misconceptions and also how we can go forward into next year. We'll see you next time, Emelia.
Thank you. Thanks, everyone.
Yeah, so to everyone watching, remember to like and subscribe, okay? Like and subscribe, because you're here on Playing with Fire so that we can help you achieve financial independence, reach higher early in the process. Once again, you're with me, Olivia Higgins. We'll see you next year for our next shows. Cheers, Emelia, to a great year ahead.
All right. Cheers.
Cheers. It's fine.